Good morning, traders. Hope you're all very well this morning. My name's Nishal Patel, and I'm going to be taking you through Phoenix Blue's daily update for today. Today is Thursday, 21st of September, 2017. And first and foremost, what we're going to do is we're going to have a look at the economic data that's being released over the course of today. Now, first, we've already had the Bank of Japan policy rate decision and monetary policy statement released in the early hours of this morning. There has been absolutely no change in their monetary policy stance, so things remain the same. But most certainly, we have seen a move on the side of a weakening yen. And I wouldn't say it's predominantly straight from the monetary policy statement, but more so a kickback from the Fed's or the FOMC decision from yesterday. But we'll speak about that in a brief moment. We've also had the governor of the central bank in Australia, Governor Lowe, speaking. That caused a slight fluctuation on the market, and again the Australian dollar has weakened because of it. From their previous statement that was released last week, it very much was on the cards that they weren't too keen on the strength of the Australian dollar, and talking it down has been the primary aim there from Governor Lowe. But later on this afternoon, we've got some public sector net borrowing first thing this morning, actually the next announcement on cable, but later on this afternoon are the key announcements that we should be looking for. The fortnightly unemployment claims coming out on the USD, and then the European Central Bank President Draghi speaking at 2:30 p.m. So again, no doubt that's going to cause some ripples. Again, I think the onus is going to be on unwinding their QE, very similar to what the Fed was speaking about yesterday in terms of balance sheet reduction, and I think that's what we're going to speak about now, in fact. But that's really what the onus is going to be for President Draghi. We know that he tends to be more dovish than hawkish, and we know that he will try not give away too much in terms of how they're looking to do, how they're looking to unwind QE. Let's not forget, they're in absolutely uncharted territory in terms of going through such a huge bouts of QE and then unwinding it down. Never seen that in history, and most certainly it is a huge uncertainty for us as investors, as well as key central bank personnel like themselves. So they will be very tactile in their message, may have slight clues on how they're looking to do it and how quickly is the most. I think the most important factor that we need to gather from this. But let's talk about yesterday's FOMC meeting, and as expected, we never saw any rate hikes whatsoever. But as you can see on the dot plot that's on our screen right now, and that was the dot plot from yesterday from all 16 members of the FOMC, and we can see that there wasn't a rate hike on this statement, but most certainly they're looking for a potential increase over 2017 to 1.5%. Now, for those people that don't know, the current federal rate stands at 1.25%. So we're looking at a potential 25 basis point increase, or a 0.25% increase for the duration of this year. Now, we don't have too much time left, so most likely it is almost certain that we're looking at a rate hike come December. But they weren't willing to do it right away, and I think that's really got to do with a mixed bag of data that has been released from the States over the last few months. We've had very strong and very good GDP figures, and we've also had employment riding at around 5%, which is deemed to be, or by some economists deemed to be, close to full capacity out in the States. So good job numbers, decent GDP, but the big stumbling block from them was the inflation figures. Now, inflation figures have been coming in slightly softer than what was expected. The last we had one good CPI figure from the States, but that's one of many. But most of them have tended to be, they haven't tended to be too good from what was expected. And the Fed, or I should say the FOMC in this case, which are a committee within the Fed, are expecting three more data releases, and us as investors know that we've got three more data releases till the end of the year. So they're going to be looking at those figures intently to see if inflation does pick up a little, because it's well below their 2% target right now floating at around just under 1.8% from the last time I checked. So I think they're really going to be looking at that to make a decision call. But the onus again was on balance sheet reduction, and for those people who don't understand what a balance sheet reduction is, or their balance sheet reduction, the Fed took it upon themselves back when we were having some huge turmoil within the market, primarily down to the subprime lending in the States, causing huge knock-on effects to other financial institutions, and that's when we had our downturn in the markets across the world back in 2007 and 2008, and that's when the Fed came in and started effectively interacting directly with the market by buying bonds and paying for principal payments outright, and their balance sheet currently stands at $4.5 trillion. So what they're going to do is they're going to slowly start unwinding this process of stopping these principal payments month by month, and they're going to do it slowly because it's a necessity. If you do it all in one go, it would cause the USD to come crashing down in the system alongside it. So it has to be a slow and gradual process. But because of that, from when we first heard about it, we've seen a decrease or a strong depreciation in the USD pretty much over the course of this year, from around March, April time onwards. So it really is a huge talking point for us as traders, and a huge call of action for us as traders to follow that in suit. So what we're going to do now is just going to have a quick look at the charts, and we will see what the reaction was from yesterday and where the charts stand. Okay guys, so firstly starting off on the euro, obviously the euro is the most highly traded, or the largest in terms of volume traded globally of any FX instrument, and we can see right now the euro is floating or just resting on the trend line that I've got highlighted on this daily time frame. Took a big knock over the course of FOMC announcement after slight appreciation, and then it came crashing down straight to the trend line that I had drawn actually previously. We saw over the course of last night, we saw that it broke that marginally, and right now resting just on the top of that trend line, right now floating at 1.1894, which looking for more of a bearish movement, I would say, today, continuing off from what we saw after the FOMC announcement. So most certainly on an intraday basis, I think this looks to be more bearish than bullish, but let's see how investors react to this, and I think that's what our take is really going to be today. We do have some intraday setups ready, and if you guys would like to follow them, by all means, make sure you tune into our free Telegram channel, where we will be disclosing certain trades that we're taking throughout the day. And moving on forward, let's have a look at cable. Again, I've highlighted areas of levels of support on this daily time frame, and our resistance or our ceiling at 1.3650, and during the FOMC announcement, literally price came rocketing up, literally clipped the top of that level, and then came straight back down. It hasn't really tested that lower 34.45 or 34.50 area but has stayed on that 50% retracement, drawn off that weekly swing that we've seen previously. Slightly subdued. Investors are taking their time to see what really where the market is driving, I think, more than anything else. First thing this morning, we do have an announcement on the sterling in around 50 minutes. So let's see where that pans out. Moving on to the yen. Now, the yen, this is an hourly time frame. I'm just going to flick over to a daily time frame right now, and we can see how strong and how bullish, I should say, the greenback has been compared to the yen. So the yen again losing ground. We're at what looks to be, and if I just flick over to this weekly time frame, we're at around an 8-week high, floating at 112.57 circa. So just breaking that 1250 area right now as we speak, but still gaining and appreciating. Most certainly the greenback is most certainly appreciating against the yen right now. Again, on the intraday perspective, would expect more of a bullish movement on this. The Canadian dollar, just looking at this right now, you've got a little more technical analysis on this chart, and I thought I should leave it because the CAD really has held a lot of its ground, as we can see by that almost doji bar, that's formed over the course of yesterday, and most certainly we saw the ripple on those huge wicks on the candle, but still resting at that 618 after testing it earlier on in the week, breaking that a little right now, floating at 1.2346 right now, just on that 618 from its last daily swing, but looking to see where it comes to on the grander scheme of things on this weekly fib. We also have I would say it's more of a right now intraday bullish perspective, as we can see as it's breaking that 618. But in general, I think we're going to be looking slightly more bearish on the loonie over the longer term. Moving on forward, have a look at the Australian dollar. Now, the Australian dollar, as we've seen after Governor Lowe speaking, we have had it start to lose momentum. And we didn't see it come down, rocketing down as much as we would have expected from the FOMC, but primarily the euro and cable were really fluctuating, the euro more so. But we saw the bearish momentum continue off the course of the Asian Open and halfway through the Asian session, and right now just resting just below 79.60, or right now 79.61. Definitely driving short right now. Have been looking for opportunities on the Australian dollar as well. Let's not forget there are parliamentary elections coming up for a number of countries, but closer to Australia, we've got parliamentary elections this week in New Zealand, so that's obviously taking the knock on as their neighbours onto the Australian dollar and no doubt the Kiwi. But let's have a look at a commodity right now. What we're looking at, gold spot on the hourly time frame right now. I just wanted to show you the break of momentum. Obviously, many of you have seen the appreciation in the price of gold on this daily time frame, and then we've seen it start falling away from its highs of around 1350, and then literally breaking that, forming into this in this lovely reversal pattern that we can clearly identify on a smaller time frame. I've just highlighted it here for you guys on an hourly time frame, literally coming up, clipping the bottom of this neckline. Got this lovely reversal bar off that, and literally it has tanked in. Obviously, with the FOMC decision and the strength that we've seen, the relative strength that we've seen in the USD straight after it, we've seen the price of gold come tumbling down. Of course, there is an inverse correlation between both the greenback and our commodities. So it's something that we expect. Right now, gold spot floating at 1294.73 per troy ounce as we stand for today. Now, as always, guys, if you've got any questions in regards to what we do here at Phoenix Blue and how you'd like to improve your trading, feel free to send us an email at info@phoenixblue.co.uk. Alternatively, visit our Telegram channel as well and watch our potential trades that we're showing you guys. And please remember that all of these trades have been put up there for educational use. Until next time, traders, happy trading. Bye bye.